and welcome to Friday, baby. Patriot Radio News Hour. Joe and Jason wrapping up the week, and it has been, another one of these crazy weeks in 2024. We've got more inflation data to talk about, and no surprise, hotter than expected. Jay Powell saying we may have a problem with some of the government data. We got the Wall Street down today after being up yesterday. Gold and silver, they're not down. Up again today despite stronger data, stronger inflation data this time from the producers. And, of course, debt issues and another huge commercial real estate property going into receivership, this time in Philadelphia. Pick the city, right? I don't think it really matters, but we've got all kinds of things to talk about and a bunch more layoff announcements that kind of tie in with what Jay Powell says may be data that doesn't pass the sniff test coming out of the government. Our toll-free number, 800-951-0592. The website at allamericangold.com. And Jason, we've said that 2024 is going to be a year of chaos. We had retail sales numbers yesterday that were not very good for January. Now, the problem is heavily seasonally adjusted because we're not smart enough to realize that, hey, you know what, December's in Christmas, right? Christmas is in December. No chance that you're actually going to have retail sales only down 0.8% as they said, which was more than expected. Retail sales were actually down, almost 17%. But, again, they don't like that. You can't show that. People will freak out. Okay, whatever. Again, you have to, the smarter you are, the more education you have, the dumber you need to be to understand this logic. But job cuts today, Cisco Systems, not the company that delivers produce to bars and restaurants. No, Cisco Systems, the tech company, they're laying off 5% of its workforce. John Deere cutting its guidance, saying that crop prices, farmers, they're not getting the prices that they need. A big pullback in farm equipment. Nike saying they're laying off 2% of their employees. Some company called Toast, I don't know who they are, but apparently 10% of their employees, Jason, they're toast today as they announced layoff cuts. And then Stan Druckenmiller, one of the guys I do a lot with Stan Druckenmiller. Like when he talks, I share it with you guys because he's a real smart guy. Jason, he's been dumping his tech stuff. Just took a position in the two biggest gold miners in the world. So, maybe you want to put some gold and silver away. That's all I'm saying.
Yeah, and, maybe I'll make this every Friday, but I'm going to congratulate everybody this week that bought gold and silver. Every week, I think when we get to Friday, I'm just going to say, all you guys that bought this week, congratulations. What a great time to be buying gold and silver. If Druckenmiller's buying gold mines, in the same week, we reported this, you've been buying gold and silver. For those who haven't, you guys have your own plan or whatever it is. We'll keep trying to convince you to buy maybe today or next week. But for everybody that bought this week, congratulations. You're never going to regret buying in this time frame before things really go crazy.
Absolutely right. And it's interesting now. We saw, the 60-minute speech, very unimpressed with the people on Wall Street. Didn't think Jay Powell looked particularly good. Started pointing. We're hearing a lot of members of the Fed pointing the finger now at the government. It's the government that's spending too much money. Not us, right? Don't forget about how much we're spending. It's the government that's the problem. Now another stone being thrown by the Fed, this time when it comes to the data, particularly on jobs. So the Federal Reserve now is starting to push back, saying that these jobs numbers that are coming out from the government defy logic when we're looking at that. I don't know, right? I mean, the government's been producing jobs data forever. I mean, did they make a change that none of us know about? Jason, it really seems like they're setting up to point the finger somewhere else, and this is what the Fed likes to do. We didn't cause the problem. Somebody else is the one that's causing the problems, and I find it very, very interesting because, once again, the Bank Emergency Lending Facility, which sits at $165 billion, did not move. This should be falling, right? The Fed is starting to penalize. You get penalized now for if you're borrowing from that window, you're getting a penalty now. Now, before about 2.5 weeks ago, you got rewarded for borrowing from that window. They changed it. Everybody said, "Well, listen, this is going to go down now, right? Because these banks are smart." And they're like, "Oh, you're going to give me free money. We're going to borrow." The discount window rose again. And oh, by the way, did the Fed stop quantitative easing and not tell anybody? All of that and more. Man, what a Friday, baby. We'll be back right after the break. (800-951-0592). Joe and Jason, Patriot Radio News Hour on this Friday. A quick look in at the markets. The Dow is down 70. The S&P's down 4. The Nasdaq's down 35. Gold's up 8 at 2010. Silver, we've been waiting. Silver, another strong day today, up another 35 cents, 23.30. The 10-year note back above 4.3. Kind of interesting that we've got more inflation data, bad inflation data, hot inflation data. Remember how gold reacted to the CPI number? Much different reaction today, and we'll kind of tell you why in a little bit. Crude oil, $78. By the way, this morning I was so mad. I got the light where I get gas, and I'm sitting at the light, and they got the billboard sign out there, and it flashed $3.59 here in the Valley of Sun. It just makes me, and I know in Colorado, you guys probably don't even have $3 gas yet in Colorado, but yeah, $3.59. I mean, it was like 2 weeks ago, it was like $3.19. Get ready. Diesel prices especially are going to be taking a jump up, but you need to be diversified here. I know. When you look at it, you're like, but Joe, the Dow, it's 38,700, right? I'm not going to rule out it could maybe touch 40. Good, right? S&P's at 5,028, right? The illusion that things are better than what they are. Japan just went into recession. The Nikkei almost got back to where it was in 1987. This is the bubble effect. You know it. Listen, we've been through enough now, right? People are starting to figure out, oh, wait a minute. This is kind of like all the other bubbles that we've seen. And this is exactly what it appears is happening right now when we start looking at all of this data. Being diversified is going to be rewarded because I really think the next 5 to 10 years is going to look very, very different. I'll be surprised if 5 years from now that we're talking Dow 40,000. I don't think we will. I think it'll be a number lower than that. Then again, heck, it could be 50,000 if they want to let inflation run wild, right? If they want to live with 5% or 6% inflation, right? Hey, it could go higher as well, right? But being diversified, I think, is going to be the key to the kingdom here. Get that gold and silver put away. Check out our friends over at YRefi, up to 10.25% returns. It's fixed. What does that mean? It doesn't change. It's the same every month. You can turn your income on. You can turn it off. You can compound it. There's no fees, right? All the great things that we love. And guess what? It's not correlated to the stock market. And it doesn't care about who Jay Powell wants to point the finger at. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YRefi24. So before the break, we'll get to producer prices. We'll get to Jay Powell saying, hey, something isn't right here when it comes to the data from the government. Apparently their data's fine, right? It's the government stuff that the big problem resides. But in looking at every week, we get from the Federal Reserve, hey, here's the stuff that we let you know about. Okay, so here's how much money is being borrowed at the bank lending facility that closes March 11th. Supposed to be falling, not falling. Here's how much money is now being borrowed at the discount window. And ironically, right, isn't it ironic? Well, if you're going to punish us for using the bank lending facility, now all of a sudden the discount window's going up. But then they also tell us, Jason, how much the quantitative easing they've been doing. Through the first 2 weeks of February, they've done none. Matter of fact, their balance sheet grew a little bit. Now, that happens on certain weeks. They'll go a week where, okay, it just didn't happen. Very rarely do they go 2 weeks where they not only did they not sell anything, they actually bought some stuff. And I think it's interesting because the other thing they tell us about, the reverse repo, down another $82 billion, below $500 billion, on its way to zero, as we talked about. But what was interesting, it had a huge drop with the Fed not selling, not doing any of their quantitative easing. I think a lot of it, Jason, probably had to do with, well, the Treasury, they needed to borrow a whole ton of money as well. So the Fed, maybe took a break. But if they're going to sell the $95 billion, they're going to do it in the next 2 weeks. It appears like the reverse repo, that thing is going to drain here very, very quickly. And again, by the end of March, if it's not totally empty, it's going to be really close to totally empty. And March is kind of really setting up for kind of a make or break of what's going to happen here.
That's right, and I don't think it has to be completely empty for that facility to basically be done with. You got to add money for it to have any kind of usefulness, and I think they'll actually shut this down. I think we're heading into a long-term situation in this country of higher rates and inflation that continues to go on. I mean, we had a 40-year cycle of rates getting lower. If you look at a rates chart from 1980 to today, which, believe it or not, that's 44 years, you'll see rates dropping, as a whole, all the way down until about 2020. And now it's a very small hockey stick, but if you look at the hockey stick before the high rates in 1980, rates were climbing over a period of time of 40 years. So we're most likely in a phase where the Fed, whether they like it or not, or the financial interest, this country, we're going to be looking at higher rates and maybe climbing rates and inflation that doesn't go away for a while. So then, and Joe, what does that actually look like? We haven't been through this in a long time. I wasn't around in the 50s and 60s, going into the 70s. So I think a lot of people have forgotten, even guys who've been in business for 40, 50, 60 years, that it's hard for them to make a play on it when they're probably retiring or dying, some of these guys. But yeah, that's where we're headed. Higher rates, permanent inflation, and this is usually lean years. It could be for a while. Look at Japan. Excuse me. Japan's been pretty lean for a while, Joe, hasn't it?
Yeah, and it's interesting. Producer prices 50% hotter than expected. Reaccelerated to 0.3%. Now the expectation there was only 0.1, so it was even hotter than that. Year over year, they were hoping it would only be 0.6%. It was 0.9%, so 50% hotter there. But it was worse when you got rid of food and energy, and it really wasn't food; it was energy. Gas prices got cheaper, which they normally do in January. That's a normal thing. That's over, by the way. This is the problem here. We're going to get energy prices reaccelerating, excluding food and energy, up 0.5%. So that's, you extrapolate that out. That's 6% on a year-over-year basis. And it's just, there was not a good number there. The core, which they love this core stuff. That was a new record high, up 17.4% since Joe Biden was in office, and yada 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 on this. Both the CPI and the PPI for January, Jason, kind of flew in the face of the Fed got this thing under control.
Yeah, and does the Fed have control or not? That's always been a question, right, Joe? Are they imbeciles that don't know what they're doing, or are they doing exactly what they want to be doing? Because if they're doing exactly what they want to be doing, Joe, it's very possible, and I think it's probable, that this is the sort of ebbs and flows in the market that they create. There was, market booms and busts before the Federal Reserve, but generally it was short-lived. It wasn't like this. There was not bank runs when there was no central bank, like we've had since there was a central bank. And so I think, Joe, that this is, I think they profit when markets are going down. They profit when markets are going up. Have they lost control? I don't know. Are they supposed to lose control? I always hate to say it out loud that, the Fed, they've lost control. They're so dumb. But sometimes it feels that way, and then other times it's like, man, how much money are they going to make on this one? How many assets are they going to sweep up? All their cronies. We say the Federal Reserve, Joe. You say Federal Reserve, but there's people that own that. There's people that own that. These people are licking their chops, Joe. They're going to sweep up all these cheap assets when things go into a serious downward spiral. So, we could talk about all the mistakes they're making. Well, it's just because it's mistakes, because it's going to hurt us. Anybody that's invested in some of these things are going to go belly up here in the next months and years, right, Joe? So the parasite of all mankind is the central bank, right, Joe? Just sucking the blood off the citizens of our country.
Yeah, and now it really is a catch-22 here. The job market numbers starting to be questioned as they're saying, hey, these numbers defy logic. I don't know about that. I think this is a very similar, going back to the Obama administration. I used to say it over and over and over again. There's jobs out there. There's just jobs out there that people that have a higher degree, a college-level degree or any type of common sense really are like, well, God, that's not a good job. Right? There's plenty of work. And I would say there are shortages in certain areas when you're looking at restaurants or hotels, daycare jobs, nursing home jobs, right? The bedpan jobs. Jason, those are the jobs that are out there. Right? I mean, that's just the reality. One of the new leading trends in Google, can't find a job. And this is really true of the kids graduating college again now. Hey, wait a minute. I've got my college degree. I can't get a job. I'll just take two of my son's friends. One of them just got laid off. So think about this. They just graduated in the last 2 years. One of them got laid off. I'm going to go back to school. I'm going to go get my MBA now, right? I don't have a job. Another one got his degree from the University of Arizona last year. He's a little behind, but he got his degree last year. He's working part-time, hasn't gotten a single job offer outside of, I can go to, Chick-fil-A and get a job. I can go to Dairy Queen and get a job. But, hey, I want to get a job in what I went to school for. Jason, those jobs they're seemingly not out there. And you look at the amount of layoffs that we keep talking about, and it sure looks like we're setting up again for this economy that has a bevy of low-paying jobs that people that have college degrees don't want to do, and people with the college degrees having a tough time finding work.
Yeah, there's ever-decreasing types of jobs out there. I think there'll be more jobs for people to move into, but we're in a cycle where you damage and destroy and you move jobs out because the market can't handle it. And then, Joe, when new jobs come in, technology or whatever sector, right, Joe? They're not going to pay the way they're supposed to pay, are they? The lower standard of living is going to continue to beat that drum, right?
Yep. And when we get back, what did Jay Powell say about jobs? (800-951-0592) Patriot Radio News Hour. Joe and Jason wrapping up the week here. Got a great opportunity here. $10 Indians for the last little while here. We were able to run like $5 Indians, less for $5 Liberties, and of course now we're seeing the $5 Indians go back to stretching out. As you guys know, the Indians, they were the fractional coins for the St. Gaudens, 1908 to 1933. The plague came around, right? The original COVID came around, and they stopped minting the Indians in 1916. There's just a lot less of them. Really cool design. This is the $10 piece, the half-ounce piece. 1 through 19 at $1,125. So the same price as a $10 gold piece today. You can buy a $10 Indian if you buy 20 or more. $1,120. We've only got 100 of them. That's all we have. So there's only 100 available. 1 through 19, $1,125. You're saving $15 a coin. If you buy 20 or more, save $20 a coin at $1,120 at 800-951-0592, and take the time and keep adding to your portfolios here as now fingers being pointed at the jobs number, not only by papers around the country, the Washington Post with a big article saying that another disruption for a generation of college graduates, as they say that as the school year has come, missing out once again because the jobs in the fields they want, jobs in tech, jobs in finance, right? Jobs that, you would associate, consulting, media, all are announcing layoffs across the board. And seemingly the only jobs out there, right, are these bars and restaurants and daycares. Even Jay Powell was piped in and just said, immigrants come in. They tend to work at a rate that is at or above for non-immigrants. What? I don't know about that, Jay, but okay. Immigrants who come to the country tend to be in the workforce at a higher rate than people that are born here. What? What? And you know what, though? Here's what's funny. The household survey actually says that same thing. Says that from 2020 that Americans, people born here, the workforce hasn't grown at all. It's at the same level that all the job growth has been from immigrants, and of course, immigrants. Let's face it. Illegal immigration is the one that seems to be taking the bulk of the jobs, and you have the head of the Fed actually saying it out loud, Jason. That hey, you know what? Yeah, get ready for all of you people with kids out there. Get ready for them to be living at home for a long time.
Well, and I think a part of that number, Joe, is this is just me speculating, but I would say the percent of natural-born Americans that are working, I bet that percent, let's just say, I don't know, 60% are working, 40% aren't, whatever that percent is, I'll bet that number hasn't dropped much. What I think is dropping is the number of actual available natural-born citizens to actually work the jobs. Because how many times have I said on this show, but especially I haven't to cover Joe, that we're not birthing enough people to cover our population. So I think that number for sure is correct. I don't think Jerome Powell would say that statistic if he didn't feel confident in what he was saying. And Joe, it might not be that Americans are lazy or not going to work. It might just be that there's less natural-born Americans to fill the positions. And so how do you do it? You just open the border up and let those people come in and work them. And I don't know if it's considered funny or not. I just think that that's just the facts. That's just where we're at. We need more babies, right, Joe? We need all that overpopulation in the whole world and this and that. You can't afford it. Yeah, if you don't like the border, then have more babies. That's you get more people born that are here, then there's less need for them to have to come from somewhere else, Joe. And it's another sad stat, isn't it?
Yeah, and also questioning the actual numbers, right? So again, when you have the head of the Fed questioning the jobs numbers in general, kind of saying, well, the household survey, that may be a little bit better than what the Bureau of Labor Statistics is pointing out, but the realities are, and again, to Jay's point, I think you're right. Listen, the older Americans are retiring, right? The baby boomers are retiring, yep. Right? And there's just not enough. I think the biggest thing is this push to be overeducated. I'll be honest with you. If you're not going to be a doctor, a lawyer, right, an engineer, a scientist, right, those things, right, you need higher degrees there, okay? Nobody's arguing that. But for all these other jobs, are you kidding me? You don't need a higher degree because I can tell you right now, you know what the companies do? Okay, we say you need this education. And then they sit there and proceed to tell them, okay, everything you learned, forget about that. We're going to tell you how we want you to do it. Right? I mean, you know what? Okay, I could have done that 4 years ago. Right? I could have done that. But tell me what you want me to do and how you want me to do it. You know what? The communist school system has done a really good job of training me to, hey, do it like this, right? Do it like this, right, and just do what we say. Okay, right? And now you have all these people with all of this debt, and it's almost criminal, isn't it?
College can be slippery. College can be slippery, right, Joe, because you learn in your formative years through the school system to do what you're told and fill the bubble in on the test. Don't ask questions. Then you get to college. That's the funny thing about college. It's kind of the first time for a lot of kids, I'm going to do what I want to do. And then they get out of college, let's say they're fortunate to get a degree, and they have this big, huge debt. And I was like, well, look, you did what you wanted to do. Congratulations. Go find something where somebody can tell you what to do to pay off your debt. It's a very tricky situation, Joe. And, I did what I wanted to do. Look where it got me. Yes, sir, tell me, because I don't know what to do. I'm in debt.
When we get back, what happened to housing? We'll talk about that next. 800-951-0592. $10 Indians. This is the first time in years. $10 Indians at $10 Liberty pricing. We have 100 of them. 1 through 19, $11.25. If you buy 20 or more, $1,120 at 800-951-0592. Like I said, we only have 100 of them. Housing starts. Just, I don't know what happened. I'm hoping this is a bad number, but housing starts down 15% month over month. The expectation was for it to be unchanged, and it's January. The weather's kind of, crappy in, the Northeast and the Pacific Northwest and all that, but not a great number there, which again, kind of even says that, hey, you know what? Housing prices are going to remain elevated because they're just not building enough. But when we start looking at what used to be abundancy and no longer be, and we talk a lot about gold and silver, copper, platinum, big shortages in all of those metals that are going to be causing a problem. But Jason, something that's been growing, how long, and I say it all the time with cash. I don't think they're going to ban cash. I don't, when the digital currency comes. I just think they're going to make it to the point where nobody takes it, right? You go to Walmart, no, we don't take cash, right? You go to Patriot, and we'll be like, sorry, or, hey, I'll take it, but it's 10%, right? It's worse than a credit card fee. Then again, are you even going to be able to go to Patriot? And what I mean by that is there's been a swell of precious metals dealers getting the boot from banks. And Jason, it's happening again. And this time, guys that they're not small players in the marketplace.
Yeah, I do a lot of. I watch videos. I'm getting better, and Jack is helping me with this. I'm actually going to, stop being lazy because we only have one TV in our house. So if I'm not on my computer upstairs in my office, downstairs, we have one TV on purpose. It makes the family have to share what you're watching instead of everybody on their own devices constantly. But because I have the TV down there, you have all the standard stuff. You got the Amazon and the Netflix, and you got the YouTube, but you can't watch the BitChute and the Rumble. I'm trying to get away from YouTube because they do not want you to watch certain things. But there are good things on YouTube, and so I like to watch some of the bullion guys, see what they're thinking and what is their predictions for the markets. Joe does the same. He's got guys he watches, and one of the guys on YouTube, and I know people in our audience, they've seen this guy. I'm going to point one thing out, which is really cool, but it's Yankee stacking. He has hundreds of thousands of watches on all his videos. They're out of New Hampshire. His big stick, he does his own videos. He started by doing his own videos, and he just doesn't show his face. But he started going to his guy that he buys from, his Patriot Trading Group in New Hampshire, and this guy's name is Tim. Tim has been dealing gold for 46 years at least. I don't know, it might be longer. And he shoots videos, and it's one of those, hey, here's my really knowledgeable, here's my Joe Jaquint in New Hampshire, and my Eric Cederstrom, and he's the one that helps me learn about stuff that, I do my own research, but he's been my guy, and they have some sort of a partnership, and they shoot videos regularly. So this guy, Tim, he does business, I think, that's on par or probably a little less than what we do at Patriot from Colorado and Arizona. But he does a lot of business. He's been banking with the same bank or essentially the same branch for 46 years and got canceled. His bank canceled him. And we're going to play this video throughout the rest of this show, and then we're going to bleed it into the half-empty cup of Joe. And I love this, Joe, because one of the reasons I don't put guys like this on the radio very much is because they're selling gold and silver. They're doing the same thing. We're not really in competition. I like Yankee Stacker. He's a really good YouTuber. He's got all kinds of links. He's got his He's got his gold sponsor. I'm pointing out specifically that he has a gold sponsor. I'm not going to mention it, but it doesn't really matter. Here's this guy with a big YouTube channel. He's got a major gold sponsor on his channel because he's got a big channel. But where does he buy his gold and silver, Joe? He buys it at the local place where Tim is. So I love the way that Yankee, who doesn't show himself on the videos, I love his mojo. I love the way he's making the videos. He's attached himself to a really successful local coin dealer. And they talk shop just like we do on the air, Joe, every day about what's going on with the country and how bad our jobs and this and that. And suddenly, I go to Joe this morning. He's like, look, just a couple days ago, his bank dropped him, Joe. It's a scary thing.
Yeah, and it's one of these things where he's been going to the same location for 46 years, but it's been gobbled up and gobbled up and gobbled up, and the last gobble has decided, hey, you know what? There's a reason they threw him out, right, Jason?
But, of course, they won't tell him. That's always the thing with these coin shop guys across the country when their banks are tossing them out on their butts. Well, we really can't tell you why this is happening. Wow, thanks, partner. Thanks. I mean, all the business I did with you, yeah, thanks a lot. But Tim's an old-timer. I think he's either in his late 60s or early 70s. He takes it really well, Joe. He understands it.
We'll be back with that and more. Patriot Radio News Hour wrapping up a Friday. $800-951-0592. We'll be wrapping up here. Gold still up 7, 2010, 2010. Silver up 41 cents now, 23.37. $10 Indians, the same price as $10 Liberties, 1 through 19. 1,125. You buy 20 or more, you can get it for less than a $10 Liberty. 1,120. But Jason, this is something where, like I said, I have a sneaking suspicion this is all due to cash, and the fact of the matter is these banks don't want to do it. They're regulating it, and especially these smaller banks. Cash is such a sensitive issue because all of them are on the brink right now, and you're starting to see these people, and I don't care, gold dealers, jewelers, pawn shops, right? You're starting to see them all get the boot because, and I think they never tell them why, but I think that's probably what it really is, and eventually you just stop taking it.
I think that's a wise look at what's happening, Joe. It's pretty obvious that cash is now the enemy of the Fed and the financial system. So let's get a little nibble of this. We'll get you a little preview, and then we'll carry this over. It's about 18 minutes of footage, but it's just really good. That's a good conversation between Yankee and the coin shop owner, Tim.
If you guys want to follow us over to the Half-Empty Cup, go to 1360khnc.com, and you just stream it right in, and you can catch it as we'll roll this over into the Half-Empty Cup.
All right, here we go. Let's get about a minute or two of this before we end the show here.
Tim to join me in studio to talk about something that just recently went down. In fact, today when I went into your shop, you're like, Yankee, we need to talk, and we need to do it live, so I need to come in to your studio. You received a notice in the mail, and we're going to review that notice. I want to ask you what happened. I'm going to ask you why you think it happened, and then we're going to get into the meaning of it. I want you to go through this letter. In fact, I'm going to put it up on the screen so people can follow along as you read it.
That's fine.
Does that sound good?
Yeah. I deposited a lot of cash. I mean, sometimes very large amounts of cash. And in a world that we don't know anything about, that collusion between the banking community and the government, they have things called suspicious activity reports.
SARS.
Yeah, and if I deposit, or somebody, back up. If somebody brings $10,000 of cash into my store and they're buying gold with it, or silver, they would have to fill out the 8300 paperwork. And anybody who's curious can go look at Form 8300 IRS. And it is a detail of all your information and the store that accepted all this cash and exactly what the cash was. And, of course, you have to put the person who gave you the cash has to put his Social Security number down, et cetera. At one time, you had to put how many 1s, 5s, 10s, 20s, but they don't do that anymore.
Okay.
That's a good little bite, Joe, because we're going to hit the end here. But there's your little start to, old-time coin shop in New Hampshire, their bank telling them goodbye.
Yeah, so follow us, 1360khnc.com, and we'll roll this into the half-empty cup. Jason and I will be right back in a couple of minutes. Patriot will be back on Monday. Stay with us.